What happens to a fintech after they raise a record seed round? I find out in today's episode of Fintech Chatter. Today's guests are co-founders of Constantinople, Challenor and Macgregor Duncan. I'm your host, Dexter Cousins. I'm also the founder of Tier 1 People, the executive search and recruitment firm that helps high-growth fintech ventures attract and hire exceptional talent. Constantinople last featured on the show in June 2023, barely a year old and coming out of stealth mode, announcing a record 30 million Oz seed round. At the time, I put my reputation on the line, saying Constantinople would become an Aussie tech giant. For me, it was simple. They had Tier 1 founders, Tier 1 investors, and Tier 1 people. For listeners who want to hear about that first show, I'll put a link in the comments. But today, we're talking about what's happened in this last 2 years. We'll explore the journey of fintech founders 3 years in, what they've learned, what did they get right, and what do they wish they could try all over again. Without doubt, Constantinople is one of the, if not the most ambitious project in fintech globally. Di, Mac, welcome to the show. Mac, you're coming back, but Di, it's your debut on Fintech Chatter.
Yes.
Mac's already done this before, but for those who didn't listen to the episode from a couple of years back, tell those listeners a little bit about Constantinople.
Okay, well, so Constantinople is a complete banking platform. What we've decided to do is really try and help banks with what's under the surface. So building a banking platform that covers the totality of what a bank needs to run. And that's from channels all the way through to product systems, operations, and all of the components. Because we really want to see bankers get into the business of meeting their customer and member needs. And often we get dragged as bankers into things that are probably important, but really don't change the customer experience. So we're looking to really enable our bank clients to have market-leading experiences in the market, so the best banking capabilities that they can have. And really enabling a number of smaller players at the start of our journey to really be able to compete across the market and satisfy what their customers need from a banking perspective.
So we've seen kind of complete operating systems for so many other industries over the decades.
Yes.
Why isn't there one up until you guys for banking?
I think and maybe just to pull it up a bit, I think there was a great article that Matt Levine wrote in Bloomberg a couple of years ago. He's widely considered the world's leading commentator on banking and financial services, perhaps with the exception of you, Dexter. And Matt wrote this, what Matt said is that for various historical reasons, every bank is vertically integrated today. It runs the business of being a bank, but it also then runs all tech and ops. And he was saying that if you were to redesign banking today in 2025, there's no way you'd design banking like that. You'd have banks focus on what they're good at, the business of being a bank. And by that, we really mean enabling their mission, serving customers, managing the balance sheet, funding themselves, managing the regulatory obligations. You'd have banks focus on that aspect. And then you'd have large, well-run tech companies who manage all of the commoditized or undifferentiated aspects of being a bank. And I mean it as no disrespect, but if you go into any bank in the world, like no one goes into tech and ops and says, wow, that looks like AWS or Stripe inside that bank. The bank's DNA is mostly around how they manage risk, how they fund themselves, how they manage the balance sheet, how they price, and particularly how they serve their customers. But it's not around tech and ops, and therefore that was the opportunity that we saw to really step in and manage all of that on their behalf. Now, specifically to your question, why have it not been done before? I think there are a handful of reasons. A business like ours is completely enabled by public cloud. You can't run the breadth of our service other than on cloud, and so we're probably 5 to 7 years into banks being really comfortable operating a lot of their applications in public cloud. I think we're moving into an AI world where a lot of the operational services that have historically been done manually can now be done through software, and in particular through LLMs. And that represents a massive shift in how banking will be done. So I think the business model, or the mental model around what we're doing, I think people have thought that there's a big opportunity historically to do that. Just practically speaking, I don't think you could actually execute it until more recently.
Yeah. When I was last here, you were actually 12 months into the business, but it actually coincided with a big announcement that you'd had a record Australian seed round. You'd been in stealth mode for 12 months. At the time, I think you were about 50 people. Where's Constantinople now in March 2025?
Yeah, well, March 2025, we have 4 clients as part of our client base here at Constantinople.
So it was the one flagship client who was an investor when I was last year.
That's right. So Great Southern Bank was our foundational client, and we've been really fortunate to then sign 3 other clients on the platform. Our company's gone to multiple geographies. So we're operating in Australia, New Zealand, Singapore and India. And we've taken that workforce from 50 people to 150 people.
Wow.
So it's a significant growth phase that we've gone through. I mean, and just to sort of 4 clients, 4 geographies and 150 people at Constantinople.
So what have been, I guess, the big challenges since I was last here?
Yeah.
Getting 3 clients, I would assume, for a business of this nature and the sales cycle that's involved isn't an easy thing to do.
Before you answer that, I think the really key thing these are not just standard enterprise clients. Yeah. We are really, we are running these banks end to end. As Di said at the outset, channels, so mobile web, product, ledger, all operations, customer service, compliance. We manage all of that on behalf of our clients, and so it is a daunting exercise to do that for a single bank. To now scale that across 4 banks, and of course we're in advanced discussions with a number of other banks. The scale of the platform that we're running is really complex.
So, and to kind of double click on that as well. If you look at the typical sales cycle for something of even lower down, much lower down the scale, it's still 12 to 18 months of kind of wining and dining and moving through the process before even the contract gets signed. You're now in kind of live phase with, or certainly implementation phase with business. How have you been able to kind of accelerate that sales cycle, Di? Because it's the biggest frustration that every one of my clients gets. It's probably the hardest role for me to fill when I'm recruiting as well.
I think maybe just an aside, I think it's a really enjoyable process to meet bank executives and understand their challenges, and hopefully we can provide them with a pathway to be able to better. So it's actually quite an enjoyable experience for us. So yes, of course, it's a significant undertaking, but we sort of look at this as how can we add value. So our approach has been twofold. One is to constantly provide proof points around our progress. So we're a 3-year-old company, we're a young company. And as Mac really nicely articulated, we're asking a bank, to move their entire bank to us. And so to do that, we've got to build trust, we've got to build credibility, and the best way to do that is we do what we say we do. And we're really transparent around how we did that, when we did it. And I think that builds a lot of credibility with people. We got Great Southern Bank into market when we said we would. We've delivered our mortgage capability when we said we would. We're now going through and making enhancements to our platform when we said we would. So for us, what's really important with our clients is that we continue to deliver, and that's what's enabled us. I wouldn't say shorten a sales cycle. I guess that's the outcome of it, but I think that proof points has been something that a CEO and a board can get really comfortable with.
So we're,
Sorry,
like we're not a, so for instance, we're not a marketing.
We're not a marketing.
We're not a marketing-led company.
Yeah.
I mean, we have possibly the shittest website anyone.
I think I've done the most marketing for you.
Well, I think
What I think with a business model like ours, execution is paramount.
Yeah.
Like you just have to, you have, as Di said, you have to stand behind what you're telling people you can do, and so it's not about having a sexy website or doing amazing social marketing. Those things can create some froth, but actually when you're selling to bank executives and boards and trying to get them to make the biggest decision that they will have made in the history of their bank, which is to move their entire customer base and operational activities over onto our platform, there's only one thing that they're looking for, and that's confidence in our ability to execute and deliver for them.
And we treat it like a partnership. This is not us sort of selling a capability, and this is a deep partnership, and this is really important to us. Because we've actually been on the other side. We've been in a bank executive role where we've been let down. And you're trying to explain that in an organisation. We don't want any of our clients to have that pressure, because running a bank or being part of an executive team at a bank or being someone in operations in a bank, these roles are complex. Banking is hard. And so it's really important that we look at this as a partnership, and we do what we say we're going to do.
I think as well, it's one of the biggest distinctions that I've noticed between cultures of a fintech and a bank is that in a bank, if you make that kind of mistake that you're talking about, it's kind of career over, right? And that's the kind of, whereas you make mistakes in a fintech environment, as long as you're accountable and you can fix it, it's kind of forgotten about, right? It's like treat as a learning experience. And I think this is, I guess, leading into what I wanted to ask you next, which was, what's been the kind of resistance that you've faced, given that we've had, a decade of failed experiments, a decade of froth, a decade of broken promises and hype, and from the fintech industry. With a few successes in there, but a lot of it has been kind of a lot of oversold promises. How hard has it been then to convince potential customers that, hey, this is actually the real deal?
I think I think the first thing is we're creating an entirely new category. I mean, no one else has done what we're looking to do globally. Which is a fully managed service across all tech, all infrastructure, and all operational activities. So, the first thing that we've needed to do is really explain to the market that our offering is completely different. We're not your regular tech vendor. We are a platform for partnership, for long-term partnership. And so that has taken us a while. I think, though, that what we typically hear from most bank executives is conceptually what we're offering makes all the sense in the world. There's a sort of, sometimes we hear that there's an inevitability that in a decade the industry will be structured along the lines that we are outlining. Where banks focus on, as we said before, the business of being a bank, and you have large, well-run tech companies who manage all the commoditized and undifferentiated, much like with AWS. AWS manages the commoditized and undifferentiated aspects of storage and compute and security. So we don't have much difficulty convincing banks that Constantinople is the future. But as one bank CEO sort of jokingly said to us, I'm in a desperate race to be fourth or fifth onto your platform. I don't want to be the sandpit. I don't want to be the first person migrating my entire bank onto Constantinople. I want to see one or two others go first, and then I'll have the confidence to move myself. And so for us, the position we now find ourselves in is, as Di spoke about earlier, is we've established these proof points now with 4 clients. We're able to go to other banks who have long expressed interest in partnering with us, and we're able to say now, you're not first. We have a bank now in market. Great Southern Bank is live and in market. We have 3 other clients, and so we're able to de-risk, just methodically de-risk what a migration onto Constantinople will look like from the perspective of a bank. And of course, if you're a CEO or a board of a bank, it's easy to get excited around what Constantinople can offer. But you're also got to mind all of the risks associated with that. And so, as I said, methodically de-risking what that looks like for a bank has been really critical for us over the last 12 to 18 months.
I want to talk about the other side to the equation as well, which is that, and I say this with a lot of respect for people who are trying to tackle this problem. 3 or 4 people in Bondi in a shared office going into a banking CEO and saying, hey, we're going to fix all of these problems for you, which there's a lot of people who've actually taken that approach. You kind of get laughed out of the room, right? And I remember one of the claims that and where I really kind of put my reputation on the line after we did the first podcast, Mac, was that if you're going to raise serious capital, you've got to be solving really big, bold, complex problems. And there's no way you can do that with just a couple of people in a WeWork or wherever kind of going out raising. And so at the time when you'd raised, it was just before we saw the kind of market tank and that market dry up and get very difficult. However, I came away from that with anybody that was speaking to us, if you want to raise capital, it's there, but it's only going into big, bold, global problems where there's a huge TAM. We've subsequently seen that whilst the, capital numbers have increased, they've been concentrated on a smaller group of businesses who are tackling big, bold, global problems. Do you want to tell us about the recent raise that you had and how that came about? And I'm going to let you do it, Di, because Matt got the last one.
No, but that's what he's just so good at. So I feel, I think capital raising, I come from a banking background. So, going in and sort of talking about where you're taking your business and the capital you need and, the boldness of our idea, I think is compelling. I think also because we've gone from a seed to our Series A, my view is that we were able to demonstrate what we had delivered. I don't think we would raise that money if we hadn't met the milestones that we had set out for us to deliver. And it's coming back to what I said around clients. It's so important when you're running a financial services platform, a banking platform, for our clients that we understand the regulatory perimeter that they're operating in, and for our investors we're able to demonstrate that we can meet what the market needs and that we understand the market and we know how to position ourselves and what's required to build the company that we've built today and where we see the future headed. So again, from my perspective, we were able to say to our existing investors and new investors that joined our cap table that we have delivered. And I think that holds you in a really good position when you're trying to move through that the stages of capital raising.
I know it sounds a little bit kind of trite, but this is just actually what you do in business, right? And kind of the old days when I was starting out in my career, you'd wear a suit and go and ask your bank manager for a business loan to go and just get a business off the ground. And that's fundamentally what you had to have, right? With just a business plan and milestones. Why do you think that's kind of got a little bit lost on, people that are looking to go out to market and engage with investors?
I think there was a couple of things. So firstly, we've never seen capital raising as an output in and of itself. it's and I think there's a tendency.
Yeah, nobody ever announced, getting a bank loan on LinkedIn in the past.
And sometimes you see, you see early stage companies. They think that that's the game that they're in.
Yeah.
But that's not the game that you're in is building a business. Yeah. The capital is just an input that allows you to do something, and so I think that's so we've never wanted to be known as a company that's really good at capital raising.
Yeah.
And so that I think and of course that's, I mean.
It's quite a paradox. I was going to say, just a paradox, right? That you've actually, you've raised more than I think anybody else in the last couple of years.
But the investors, of course, are not looking. I mean, the investors are looking for substance. They're looking for execution and the proof points that Di mentioned. I think the other thing that may have differentiated us a little bit is that we never set about to run an active process. We were really deliberate with who we wanted to work with. So, we went and spoke to Paul Bassett, we spoke to James Cameron, we got on extremely well with Sachin from Process. And so we were much more deliberate in trying to find the people that we wanted to partner with for a decade and build a company together. Now, we've got some friends who run companies who say, our favourite investor is, I don't know, Tiger, they gave us 100 million and we've never heard from them since.
Yeah.
That's not our mindset. Like, when we partner with people, we want a real partnership. We're on the phone with Paul Bassett and James Cameron and such. We talk to these guys all the time. They are actively involved in building our business. We have them actively involved in our sales process, meeting with chairs, meeting with CEOs. Like, they are not just providers of capital to us. Yeah. And so what that's meant is that we're not in a transactional relationship with our investors. We're not just asking them for money and then never wanting to talk to them again. Yeah. And I think most investors are looking for that kind of relationship too.
It's really interesting that you mention that, because obviously, there's so much out there around how terrible VC are, and some of it's it's like recruitment, right? Like, if you look, you're always going to find bad recruiters and dodgy ones. But I think what you've just touched on there, Mac, is something that it never ever gets spoken about, and that is that the congruency between not just the investors and the money, but what are you going to do with that money, and what's the plan, and what's it for, and what are the milestones. And I think what we've seen, and we continue to see with a lot, is raise money and then it got spent on hiring people. And I think that kind of fed in more to the VC model, which was, hey, how do we keep deploying capital so we can get our management fees, versus how do we get a return for our investors and actually create value.
I think just on that, one of the things that people misunderstand is, within a venture capital firm, everyone talks about portfolio diversification. And so the venture capital firm is making lots of different bets, looking for the outsized power law return. But that is not what it looks like for an individual partner in that firm. Paul or James or Sachin are probably making one new investment each year. And so that investment is very, very meaningful for their particular career. It might not be meaningful for the fund, but for that individual partner, it's extremely meaningful. And therefore, it's sort of unrealistic, I think, for a lot of early stage founders to think that it's easy. You really need to appeal to these partners that you're the one company that this person is going. They might talk to 300, 500 companies each year. How are you the one company that they're going to back that year? And that's a very high hurdle to jump over. And I think, I think when people frame it that way, I think it's easier to understand why. It's difficult.
And it's I think the VC industry is very much like the recruitment industry in that it doesn't do itself any favors, right? It's like me, I don't advertise because I don't want to reject 999 people, right? Because it's not good for a brand that you tell 999 people who apply to get lost, right? And I think this kind of, yeah, give us your pitch. Yeah, let's do pitch nights. I think it needs a little bit more discernment around that initial kind of top of funnel filtering process of, hey, look, let's dispense with the pitch nights and build everybody up, right? Let's get really discerning around what's the qualifying criteria to come and have a chat with us. Rather
if you look
than
at,
just
I mean, if you just look in fintech, if you look at a lot of the bigger fintechs, so Squarepeg has Airwallex and Zeller and Athena and Constantinople. Airtree has obviously us. They've got Zepto. Every one of these companies is founded by people who have come out of banks.
Yeah.
It's, and this goes to what Di was saying earlier. If, it's really hard to operate a business inside the regulatory perimeter.
Very.
You really need to know what you're doing. And so the sort of, I think in fintech might be quite different from what you see in a lot of other early stage companies. Typically in Australia, the bigger fintechs are formed by people with 10, 15 years experience. And I think that's really critical.
I think one of the other things that you named all those companies and knowing the founders is that up on my first meeting with them, I walked away and just was like, wow. You're kind of instantly impressed, and it's not because of necessarily what they've done, it's the whole package, right? The way in which they conduct themselves, how they communicate, their work ethic, values and principles. They just ooze, talent and like people that you'd be prepared to, certainly I'd be going to my clients saying, you got to meet this person, right? And I think that's one of the things that often, gets talked about, but not really, I think actually executed very well, is how do you actually assess the individuals that you're investing in, rather than just the gut feeling that, hey, they went to Harvard, but their principles, their values, work ethic, their views on the workforce and leadership and how you build businesses, because I think it's becoming really, really clear that there's a movement away from the kind of work from home, and particularly for businesses that are in growth phase and creation phase. More and more the data and the studies come out that, hey, if you want to build a business, you've got to kind of have people, within the same building. How have you found that growth journey of going from 50 to 150? When I was here, the office was packed, it was buzzing, it was, there was a lot of energy. There's still a lot of people here, but now you've got 150. And typically the growth pains that I see start at 50 to 70, where it's kind of like, oh, we thought this was easy. Maybe it's not as easy as we thought.
Scaling a business is probably one of the most challenging areas for a founder. So as I said at the beginning, we've gone from just being in Australia to now 4 geographies. So I think for us, the ability to communicate our vision, how that vision translates to what the individuals are doing on a daily basis. Like we communicate and communicate and communicate. I think we have got so familiar with the words that we use around, like we say the same thing 15 times. And that's just because people hear it differently. We've got to repeat it for it to become part of how they're thinking. So for us, communication has been the key. The other part is around good documentation. And that's an area that we've definitely got better at and need to get better and better at it. Because if you're starting to run a distributed workforce across 4 locations, you've got to make sure that everyone understands what that means and what does that mean in detail. Like on a Teams call, people probably have 15 minutes of attention, and then you've got to back that up with minutes and documentation to support that conversation. So for us, it's definitely been an interesting challenge to go from 50 to now 150. Do I think we've got it completely right? Probably not, but we're really doing much better than we expected. We're lucky too in that we've got strong managers in each of those locations. So we've got a team in Singapore, the team in India and the team in New Zealand, really making sure we're connected. One-on-ones is really important in our company. Performance management processes are important, not to give feedback, how's it, how are people going, how are they feeling, two-way feedback. So there's things around the edges that we're putting in place and have done to try and move the company in the right direction. So we have annual planning. We do planning every quarter where we get the company together, we write a 5 to 10 page memo about what the company needs to achieve in that quarter. And it takes time, but my gosh, everyone in the company can go back to that document and say, okay, this is what Mac and I said we needed to do. This is now my key objectives. Am I tracking? And then every week it's a small, very small little thing we do. We send a weekly email to the entire company every Sunday.
It's not an email.
Sorry, I always say email. It's a Slack message. I'm still a banker at heart, you see. And so that email shares what our priorities are as like, what do we do? Like, what do we as CEOs do in the company? And then giving people sort of thematics around what we're thinking about, what's happening in the market, how our clients are feeling. And that is really, people look forward to that because it helps them then set, okay, I'm aligned with what the company needs to do. Is that aligned with my objectives? So I would say we're fortunate that we've run large teams across multiple geographies in our career. But it's just so hard to describe what it's like to go from like just the two of us to then 150.
Yeah.
Like it's so many little things, Dexter, that you just
So I'm gonna kind of and this might sound a little bit, well, not odd, but you might go, why is he making such a big deal of this? You mentioned the word documentation there, right? And this is now the 210th founder interview that we've released. And actually on Friday caught up for a coffee with an old client of mine who was episode 3, 5 years. It was actually literally 5 years to the day. And he's just successfully exited his business. And he said something at the time which kind of really struck me as much as the documentation piece that you've just mentioned. And that was something that you've also just reflected on, which is we don't have a year strategy, 5-year strategy. I got a 90-day plan and a 10-year vision, right? And it was like that planning thing is every 90 days we're planning, right? And that piece around documentation, in 210 interviews, not one person has mentioned we had to document everything in order to scale.
Well,
like our team is amazing, sorry, but like our team's amazing. So every JIRA ticket that we have is clearly documented. So Mac and I can go in and review the JIRA tickets, what's been, the product managers are given to the engineers, what's the status. And our teams, that takes a lot of effort. But the benefit of that is we'll get a better quality outcome. And there's no second guessing or going, oh, did I hear that right?
Yeah.
It's so critical. Now, I think we can get better and better at it.
Yeah.
But it just helps a company move forward. And there's nothing like it being written down. And as the writer of some of the communication, it requires you to think. Like, it really requires you to think. Like a PowerPoint and a Confluence page, like they're good, but you've really got to think about it. And I think that creates a lot of consideration in the company or excellence in the company when you're putting real thought into what you need people to do. And I think you're...
We're going to go off on a massive tangent here, but I think this is a really important point that you're raising, Di. So back in 2010, I was working with one of the top 20 ASX listed companies, and they had a huge issue, as everybody did, around Gen Y at the time, and why they're leaving after 3 and 6 months, and why, not even can they solve problems they don't even recognize as a problem. And what they commissioned a whole heap of research, and what they discovered was Gen Y is the first generation that had the internet at school.
Yes.
Whereas when we were there, if you got an assignment, you had to go to the library, you had to get books, you had to read, synthesize, write down, scribble out, write down again, get marked, get red pen all over it. And that whole process, developed critical thinking skills within people, right? And, we then fast forward to, hey, they're at school, here's an assignment, I'll Google it, I'll put it in a pitch deck, it'll all, copy and paste everything, it'll look fantastic, it reads great, you get top marks, but you've done none of the muscle building of the mind to actually be able to develop those skills. Yeah. Fast forward now again where we've got AI and ChatGPT, and guess what? Businesses are finding that critical thinking isn't existing in their company because people are ChatGPTing everything. So I think that it's such an sounds banal, like the documentation piece sounds banal and something that that's not going to move the needle. But I think it's one of those things that is just doesn't get discussed at all, and it's actually critical to the success of the business.
Yeah.
I think, one other thing I'd add is, when you look at sort of the high-level macro markers of us as a company, and it sort of all looks like a romantic journey, but it's actually, it's much harder than it looks. And the way I would describe this is that people's, this is true for everyone, and it's true for companies, they naturally want to operate at room temperature. Like everything just wants to find its natural level. But in an early stage company, if all you're doing is operating at room temperature, you are no different than any other company out there. And so early stage companies require a massive injection of energy and heat to really amp things up inside the company and to start, delivering at a velocity which is very abnormal. That's the secret of early stage companies, but that requires such an enormous commitment from everyone. The energy and the heat you need to bring to demand excellence of people when the natural inclination is mean reversion. I just want to do enough, and so that's the really taxing thing, is that in every single instance in the company, in every meeting and every engagement, you have to seek out the confrontation with people. And I don't mean aggressive confrontation. I mean just pushing people to do what they don't want to do. Like, that's not good enough. You said you were going to do X, I want you to do Y. And every single day pushing the company relentlessly is what it takes to, to put yourself in a position to build something that is different from what is already out there.
And I think this is why there's such a heated debate about work from home, right? Is that, and I'm a big proponent of behavioral economics, and the reality is, and if I look at all the studying and education that I've done, as well as then apply that to 25 years in recruitment and being able to assess leadership and all that comes with that, and see all the different cultures that work, the reality is that the people that have that drive and kind of commitment to excellence, it's probably about 10% of the workforce, and the other 90%, they're not lazy. Yes, you can trust them, but as you've said, right, they go to the base, and that base is, hey, what is everybody else getting away with, right? And this isn't casting aspersions at people. This is how groups behave, and companies are groups. They're people, and people are organized in a certain way. And they kind of from a leadership perspective, I think anybody who's a great leader works by the mantra that the behavior that I walk past is like the behavior that we settle for. And I think this is kind of where people have to just kind of be honest with themselves and say, hey, am I somebody who's committed to excellence, or do I just want to pay the mortgage? And if you just want to pay the mortgage, that's cool, right? There's loads of places, but the secret to success is no secret, right?
For all things change, they stay the same, and so that's why management books from the early 20th century still deeply relevant, because it's human psychology.
Yeah.
And no matter the tools that are changing or different ways that companies organize themselves, or whether ways of working are different, people obviously, including everyone now obviously delivers on an agile way. The human psychology remains the same.
Yeah.
And that's the part that's actually requires an enormous amount of effort.
I think if you look at, and you'll see this in India, right? Like the hunger, the capability of these people. I was in Bali in October and I hadn't been for about 11 years, and I was blown away that anybody who had a smartphone had a business. We met, we went to a restaurant and the waiter gave us a card with a QR code and said, can you leave me, not the restaurant, me reviews, right? And I was, it was prophetic for me, because I said, hey kids, like, this is what you're up against, right? Like, you're not competing against the kids you're at school with. You're competing with everybody around the world, right? For a job in the future. And I think this is what's incredible about, when you start to then move outside of your geography and you start to build a business globally, is how the culture evolves and gets, either in a positive or negative way, enhanced by the different countries that you then start to operate in.
Yeah, I think for us we see it as it has been enhanced, because we do have a workforce that is really dedicated to what we're trying to do, and they apply themselves. We have a really good face-to-face culture in the company here in Sydney and our other locations. So it has been enhanced by those different locations. I mean, our team in New Zealand, they work super hard, like they're passionate, they're excited about the opportunity. Singapore and India at this stage are more of our development centres, leadership in Singapore and leadership in India and development, but it has really started to lift the company. We get great engagement in our Friday afternoon all hands, where we get the whole company dialing in, and we're starting to share sort of different parts of the local cultures across the company. I mean, for us, it's just so exciting to be sitting here in Sydney and building a global company. It's definitely fulfilling. One of my personal dreams, and I'm sure Max, is to really show the world that we can build. You can build great companies from Australia, and you can do great things here. But we're also recognising that we're not always the place for everyone, because we are trying to do something really bold and ambitious, and we're not apologetic for that. We want to build a really big company, and to do that, you can't operate, as Max said, at room temperature.
Yeah, you touched on this earlier, Mark, around how the being like the AWS for banking, and if I look at banks and one of their biggest competitors being Revolut, a business that I've worked closely with over the last 5 years, they're again unapologetic about their commitment to excellence and what it's like to work there. And you're either up for it or you're not. And if you're not, don't go there, right? And if you are, it could be the best 2 years of your life. It turns out, the people I've put there have been there for 5 years, and which kind of startup years is like, 35?
We always say dog years. 1 year and 7 years.
Yeah.
And that's exactly right, Dexter. I mean, and we interview a lot of people, and we're really honest with them before joining us. It's hard.
Yeah.
It's hard work. We have very high standards. We expect excellence. We have a mantra inside the company. We aim to be first class in every single thing we do. And that's an exacting standard. And so, people will often say to us, I'm just not up for that. And I'm not, or maybe I'm not up for that at this moment in my life. Yeah. And we're always, we're super respectful of that. Yeah. Actually, sometimes we're like, that person is probably more psychologically balanced than we are. But if you are committed to trying to do something excellent and outstanding, it comes with a certain set of requirements. And so we try to attract those types of people to come to the company.
So I guess the billion-dollar question, I have to stop saying million because
we like the word billion.
Billion-dollar, is more relevant. Having said all of that, you're working or looking to access a talent pool that's probably only 10% of the total workforce, first of all, and just in terms of attitude and kind of mindset to work in this type of environment. Then you're looking for excellence, so you're talking about the top 1%. And then you've got all of the other challenges around relevant skill sets, competition for that person. How do you then actually hire people, and what's been your approach to getting people that are going to come and actually move the needle?
Yeah, I mean, I think it's an art, not a science, if I could say that. I mean, we have a pretty rigorous interviewing process. And it's people will meet with a large number of people within the company. So we're really looking at the company hiring the individual, not the manager. Because one thing you'll find in our company is that the people you work with are the key to your success. Yeah. And if you're not coming in and that group of people is not going to put their arms around you and help you get through that first couple of months, that can be really hard. So our strategy is to have not like 10 interviews, but at least 3 to 4 people involved in the interviewing process to really see culturally, is there a good fit? Technically, is there a good fit? Those 2 things are quite important to us. We do a lot of technical testing. So we do have like a take-home assignment and then a code, come back in and review it with our key engineers. So it's a strong process we've put around it. And then when people come into the company, as I said, there's a lot of us who are there every week meeting up with people. How are you going? How can we help you? What roadblocks have you got? What are some of your challenges? And also just giving them context. Like, why is that important? Why does that matter? Why is excellence important? And really reinforcing that. And that, I think a lot of people, you can hire people into the company, give them a desk and a computer and let them go. But actually for us at Constantinople, the better success that we've had is investing in them when they arrive.
So what's, sorry.
I was just going to say, just really quickly, I think 99.9% of our hiring is referred from
That's a good point.
people already here. Yeah. It's all friends of or people that they've worked with previously. And that is a very good first filter. If someone's been successful at Constantinople and they're able to say, I worked with this person at Revolut or at Atlassian or Airwallex or Canva, which tend to be the big places we hire from, it's a good chance that person will work in our company too.
I wanted to ask about also what you've just discussed there, Di, because that process that you've talked through doesn't strike me as the type of approach that you would see from people who are coming from big banks. If there's an observation of mine and the data supports this, is that it's very, very difficult for executives from large banks to make the leap into a startup because they're so used to doing one thing and having so much support around them that, all of the things that you've talked about, I mean, how many people in a bank would you have that would be just taking care of that process for you and you just go to meetings and then maybe check in once a quarter and do a performance review? How have you bridged the gap? And first of all, I guess, recognize the gaps that you had from that was that environment, this is this environment. These are the skills that I've developed in my career and I'm now way short in so many areas. How did you kind of, I guess, first of all, 1, identify the gaps and then 2, prioritize the ones that needed to be filled, and then 3, how did you actually fill the gaps?
And is that in terms of the company setup or in terms of...
I think between, I'm kind of going all the way back to day 1 when you and Mac.
I think maybe just a first point I'd make is after leaving the banking industry and coming into software engineering and the software industry and building platforms for banks. Someone described us as, I'm going to get this, I'll try and get it right, it's called an intrapreneur.
Yeah.
Like within a bank. So you sort of, I did reflect on my own skills when I was in banking. I was the one sort of pushing the envelope. I'm sure some of your listeners would agree with that. And doing things differently. So I've never been quite a straight line kind of person. So I think just the ability to get into a large system and make change is probably one piece that I thought would help me in setting up the business with Mac. We did have a bit of a trial run when we have worked together in the past, and we're able to sort of ascertain what we are both good at. We're not competitive. Well, I won't speak for Mac, but I'm more competitive about the outcome, not about what I do. How do I describe that? Like, I'm just really wanting a great outcome. Yeah. And so I don't mind if someone is better at that than me.
Yeah.
Because I'm not good at it. So why should I spend a lot of time trying to get good at it when I'm good at these other 15 areas? And there was a natural skill set alignment between my background and Macgregor's background. I don't know if you'd have any comments to that, but I think when you ask people at Constantinople, what's it like having COSI, I always say, oh, it's really simple.
Yeah.
Like, we know what Di does, we know what Mac does. And yeah, it works well.
What and from your side, Mac, what kind of were the, or what are the the strengths that you kind of felt you brought to bring to the partnership? And
I'm not sure that it's harder for me to talk about. The one thing I would, so I agree with Di that we have sort of complementary skill sets and we work extremely well together. And at the same,
you're being too modest, right? The top people are super self-aware, so yeah.
All I would say though is that I think the one thing that we've done quite well is that we really do have an insatiable appetite for learning and improvement, and so we really don't have fixed views on anything. We're constantly self-critical, trying to work out what did we get wrong there. We're constantly reading, constantly listening to things, trying new things.
Yeah.
And so I think that, and you make these micro changes every day, and they can be imperceptible. But over 2 or 3 years, you look back and the compounding returns you get from those small little changes, you look back and you think, wow, we are very different executives today than we were 3 years ago.
Actually, one of the beauties of doing the podcast, right, is that bringing people back on, looking at that journey, right, and there are some that have failed. What did they do wrong? There are some that are successful. What did they do right? And so I think that's one of which kind of is a beautiful segue into my next question, which is, we did the first podcast almost 2 years ago. We're kind of looking 2 years into the future. Where do you expect Constantinople to be, and what news have you got to share, if you can?
Oh, well, I mean, I think, in terms of where are we headed, we're building a single multi-tenanted platform that can, run tens, if not hundreds of banks around the world. And so we feel like we've made a really strong start, but this is a decades-long business that we're building. But we really think that the way we talk about it internally is we're building a factory that can mass produce banks. And so as we said, we've got those initial proof points now. And we need to continue executing. We'd like to move into another market later this year or early next year. But 2 years out, I think we'd like to see 10 plus banks on our platform operating.
Let's go for 20.
20, yeah.
20 banks operating.
5x is the new 10x.
Yeah, I mean, if you asked us that question 3 years ago, just to say where we are now, is we're just so pleased.
Yeah.
So if we continue operating at this level of capability and intensity and continue to deliver for our clients, we've got a really bright future.
Yeah.
And I think that's what's really important. We must deliver for the clients we have today, because that is what will make us into a successful company. Yeah. And that's really important to everyone at Constantinople. We want to make those clients successful because that is our right to play in the global marketplace.
Yeah, one of the things we often say inside the company is that the single most valuable asset we have as a company, which is our reputation for delivery, does not sit on our balance sheet. Yeah. Our single biggest asset doesn't sit on our balance sheet. And that is the asset that we need to protect and build the most. And so I couldn't agree with what Di said.
I mean, it's building a company is just like, you just got to get all the pieces. Yeah. There's no, what's the saying, no silver bullet. It's just all these pieces will build on top of each other to get you to an outcome, and you've just got to keep at it. Like, you have really great days and you have days where you're like, wow, this is hard. You just got to keep going. It's
not a very glamorous job. I think you're chatting to Nathan and Michael from Athena next week. You've spoken from tomorrow. Obviously when you spoke to Ben from Zella, like most of these people will say, I'm not sure I would have done it again. I'm not sure that I would do the same. It's much harder than most people think. But then on the flip side of that is none of them would say I would have it any differently. Yeah. It's the experience is incredibly valuable and enjoyable, but it's hard work.
We're coming to a wrap. We get amazing talent listening to this podcast. If anybody's interested in finding out about careers at Constantinople, where's the best place for them to head?
Go to LinkedIn and send us a direct message and we'd be happy to respond.
Awesome. Well, Di, Mac, thanks so much for joining me. We'll lock it in their calendar for another 2 years of the third instalment of the Constantinople journey. But it's been fantastic to chat and amazing to see the progress that you're making.
Yeah, thank you. It's been great to have you here.
Yeah, thanks very much, Dexter.